years ago, a family built an apartment complex, and they owned it forever. And then they built another one, and they owned that forever, and then they handed it off to their children. That's how apartments were built and operated. Today, it's really more institutional. So you have a lot more financial craftsmen involved in it than you do owner operators. So in that sense, with the REITs and private equity and the large owner operators, it's become less personal. So that's a loss, I think.
So you think that that's an actual added value in your organization, which is defined as better than other people, that gives you that edge?
You need both. You need to have the financial acumen, and you need to have the ability to analyze and to operate as if you were a large institution. And some of our capital is from large institutions, so we need to be that responsive. But it still comes down to a personal assessment of are we going to be able to operate this asset? How are we going to add value? How are we going to be able to beat or exceed our competition in this market? And you have to have a feel for that, and there's definitely a personal component to it.
That's fantastic. I think it's hard to find, in my opinion, from what Richard and Amy do on a daily basis, and the team does. They go and look at the properties themselves. I think that's a value that not many people in this industry have, and they feel that they can pass it on to somebody else by doing it, and it's a great thing that you do.
Well, and also in terms of the team that we build, the team, it's really the art of, if there is an art in doing what we do, and I'm not sure that it's keenly codified art. The art is being able to inspire those who work with you to have that same sense of, that same proprietary sense, and the same type of commitment and resolve. And that's how you build the culture of an organization. And that's really been our success. It's not the number of units that we've acquired or the buildings that we've done or the financial success that we've achieved or haven't achieved. It's really our ability to build an organization based on those concepts of an organization that's vested with the right culture.
And then your team sees that too.
They are. They don't see it. They are it. People don't. It's interesting. Most of the people who work with GoldOller don't say I work for GoldOller. They say they are GoldOller, and they are.
Team culture makes a big difference.
Team culture makes
it's gotta
it
make
huge.
you feel good hearing that.
It's huge. A new employee joins our company, and a typical blast goes out. Welcome new employee. Well, that new employee will be greeted with several dozen emails from employees from around the country who are just reaching out and saying, hey, we're here. Welcome to the family. We're here if you need any information. We're here to help and support. What a great choice you've made, but know you're part of the GoldOller family. And to see that really is rewarding. To know, while I certainly value, I take interest in everything that we do, as does Amy. I'm well confident that if I don't show up for work tomorrow, next week, next month, and next year, that we've been able to leverage this opportunity with a team of people, many of which are, if not all of them, are much brighter than I am. And are vested with the same type of orientation, the same type of culture that we value, and they'll do a great job. That's the depth of the organization. That's
the end trick: is get the culture right, and everything else falls into place if the right people are around you. I always notice, and I think to this day, we're the second generation behind Richard in terms of coming up, and Ben and yourself, me, and I don't believe that people come together and do business, especially in a partnership, out of chance. I think there's a reason they come together, certain assets that fit, there's certain values that fit, and what you're telling me is that's right. That's true.
Oh, definitely.
And
it's not money. If your only motivation is this is where I can make the best living, this is where I'm going to make my best yield, it's the wrong choice. Because it's the intangibles, it's that sense of belonging, that camaraderie, that sense of shared vision that makes you want to get up and work every day. It makes it good, it makes it fun. I come into your offices and I'm energized. I'm energized just being here. You know, and that's not a function of how much you're paying people. Mm-hmm. It's a function of they're feeling that energy. They are that energy. Mm-hmm. You can't manufacture it. Mm-hmm. So it's not most of it. It's pretty much all of it.
It's what it's all.
That's what it's all about.
If I may ask one
Go
more
ahead,
question,
man.
So when talking about people, and there's certain people who are going to be making decisions and acquisitions.
Yeah.
And at that level, with funds. With capital from the REITs or investment funds and large corporations, you have a seller who owns a few thousand properties at times, and you have the buyer who owns a few thousand properties. Now there's two megastars sitting in a room with attorneys all over the place, and they're negotiating. Yeah. And there's a big ego on that table from every angle. How do you deal with that kind of negotiating? You're on the buying side, so you're coming in, but the seller thinks he's sitting on a gold mine. We see that at a smaller scale, a small landlord or a seller and a buyer, but you're dealing at a much different level.
It's really not how it works, at least in this environment, this post-crash environment. In that area, it's become much more homogenized. So really what it's about is, a seller is not interested in my culture. I'm interested in the culture of his people, her people, but they're not interested in my culture. They're interested in two things. Do we have the ability to close as we say we do? So do we have the performance ability? And how easy of a process will it be for them to get to a closing table? That's all the seller cares about. So our task is to make sure that a seller is aware that A, we have the capability, and B, we have the credibility. And that's been established over the last dozen years by our doing with sellers what we say we're going to do. So if we are committed to buy a property at a given dollar figure, unless there's really a breach in due diligence, we're not retrading. We're buying it for the price that we agreed to on the time frame that we committed to buy. That's what the seller cares about. That they understand that and believe that we'll do that puts us at an advantage to other prospective buyers, even if we're not the highest dollar.
So that comes back to a statement you made earlier, which I think is a really good closing structure to this interview, which is I have found watching you guys, watching everybody, honestly Gaurav as well, very much so, more valuable than money is your reputation. And whether it's reputation of credibility, whether it's reputation of your friends and family, I've heard about it. You've read about it in like Warren Buffett's autobiography. He spent a lifetime building a reputation. It takes you one second to break it down. But you don't really understand that until you experience people that build everything around them based on their reputation. And whether it was that when the buyers or the sellers come to you, you have the reputation of closing. You're going to close. So that's a reputation you built over a track record. You also know that when you say you're going to do something, it happens, and people start to learn from you that way. We had a discussion before you came in here of a guy that your reputation somehow jumped overseas and indirectly came to us just because of your reputation. So it seems to me like that is your most paramount thing to protect, is the reputation of whether it's yourself or your company or the people around you. It seems like an immensely important thing.
It is, and again, it's not so much a matter of philosophy as it is a matter of course. So it really is not, what can we do to enhance, what do I do to enhance my reputation? That's not a question I ask myself when I wake up in the morning. Mm-hmm. What I say to myself in the morning is, what's the right thing to do here? I mean, what is it that we've told somebody we're going to do? And to the extent that we can do it, that's what we're going to do. Mm-hmm. And if we can't do it, then we shouldn't say we're going to do it. Or if there's a problem and we have really a legitimate issue, then we have to be candid and transparent and discuss that, immediately. So it's just a function of an orientation. And I found that in course of conduct, that type of transparency seems to work best for me.
I love it. I could literally sit here and ask. I mean, I'd get a bottle of wine. We could sit here all night, but Richard is...
Except I'm not allowed to drink until I lose another 30 pounds.
All right.
So what's a bottle of wine going to do for me? It's going to have to be seltzer.
Seltzer for the rest of us. A lifetime of questions could be asked. It'll be nice at the panel. I'm really excited for it because it was designed for 4 guys that... And this is how I explain the Market Maker panel, is this. The individual investor, which is most people in the area, they do a few transactions a year, and their scope of perspective is those few transactions, right? That's all they really know about the market, what they see on TV. you put a room full of guys such as yourself together in specific niches that are absolute either pioneers or kings of their industry, and what happens is their perspective is immense. Like, you can see the world from a different view. Therefore, when you're in front of a room and somebody says, hey, I'm not going to ask the questions now because these are good questions for the panel, but hey, what would you need to see as a red flag for this industry to turn? You know, what are some hopeful things you see coming down the line? These are questions that when somebody like you answers them, it's from a whole different perspective.
Yeah, you know what, you're going to find the same. I think you're going to find a lot of the same answers that I'm giving you. I give you an example. I know Alan Dom was on the panel. Mm-hmm. Alan Dom is the hardest working man I've ever met. I don't know how much money Alan has. It's irrelevant. Alan will still go and show a house at 11:30 at night or 8 o'clock in the morning, and he'll be there with his suit and tie all dressed up, and he'll still do what he's been doing for 35 years. And Alan Dom could have $14 billion, and he's still going to do that because that's Alan Dom. Mm-hmm. And it's been one step at a time. Now, quietly, he's probably amassed a fortune and owns the entire city, and we don't know it. But that's how he did it. And you're going to find the same is true. It really is. It's a function of sticking to what you know, doing it because you like it, and doing it well. And then eventually, if it, well, by the way, it requires a little bit of luck. Timing is not an insignificant component. I remember early on in my career being on a panel with some very heavy hitters, and whose names I won't share with you, but they were pretty substantial hitters, and I wasn't. So everybody was going down the room, down the panel, talking about in their introduction, what they were about. And one was about, multi-billions of dollars of this, and the other was about this, and they were all very substantial. They got to me and they said, "How did you get to your position?" And I said, "Really bad timing." That's how I got there. Really bad timing. So timing is not to be minimized. The key is stay in it till the timing's right. So it has to be that you have the skills and you have the approach. The timing will eventually be on your side.
And be ready to take the opportunity.
And then be ready to lurch upon opportunities when they come. And when they come, someone once told me, I thought it was a good thing, when you see opportunities in the sky falling down, go out with an umbrella, catch them, because you want to deal with the timing as it occurs.
Good saying. So, Richard, Gaurav.
It's an upside down. It's an upside down.
I pictured it that way. Yeah, I pictured it that way. I appreciate both your times, guys. I appreciate it. Gaurav just got back from traveling. He said, I'm coming to this, we're sitting down for this interview. Richard, you just flew in. So I really appreciate both your time. I really do. I was extremely nervous for this interview. So thank you very much.
I have no idea why you'd be nervous. It's crazy.
I was. I feel better now.
Around Richard.
I feel better now. Yeah, I feel better now. Thank you, sir. Appreciate it.
Bye, guys.
All right.
Okay.